Hey everyone, how's it going? Good afternoon. Hope you all had a great Friday. Let me get my screen share going and we can see what happened this week. Now, I realized yesterday a couple things. The first was that I, in some of the charts I was looking at a 1 week chart, so I got a little bit mixed up. But the overall analysis is still the same. Just that some of the exact precise timing of the way things happened may not have been what I was saying that what happened. So that's first. And second, I realized that for whatever reason, I thought it was Friday and I started doing a recap of everything that had happened over the week. So we won't have to spend as much time recapping today. And then we'll go on and we'll see what next week might look like. Hey John, good afternoon. Hey Joanne, 50% profit on SPX today. Nice, great job, Tim. All right, so let's take a look at what happened over here. We can see that the market continued to go higher. If I look on a weekly basis, you can see that we're starting to move up. This is a 9.52 move, but what were we talking about earlier? How the market can only go up so much, so many weeks in a row. That 9.52 is still normal, right? We were saying that maybe 20 might be kind of abnormal. So here we got the 20, but here we only had 10. Then we had negative 1.72, 3.96, and then another 9.52, or roughly 10. So that 20 move is not too likely, especially as we keep on going up. There's only so many times we can do that before we flatten out or pull back. In this case, I'm thinking this particular time more of a pullback. We are getting a little bit further away from the EMA 8. It could just chop just like this. It could just chop sideways, but this rally here is getting a little long in tooth. If we look at the weeks as well, that is 1, 2, 3, 4, 5 weeks in a row we've gone straight up, and the weeks that we've gone down haven't really been down all that much. So we are kind of past due for it. And you can see since April, there was only really that kind of one down week, May 19th, the week of May 19th. And then this one is a baby down week. So yeah, it is about time. No guarantees, no promises, just saying that under normal circumstances, we would expect it to pull back, and there is evidence, as we've been seeing that evidence build up, that that is going to happen. Hi, John. Good to see you. So when one of the strongest pieces is, I'm not sure if I mentioned in post-market analysis, I believe I did, but is VIX, where we're seeing this VIX really low. We actually crossed below 15 today, and I should say closed below 15 today. We did cross below it yesterday, but we didn't close below it, and that's the first time we've closed below 15 in a very, very long time. Let's take a look. Probably, I think over here would be a little bit easier. So you can see it's been at least a few months. Back in February was the last time we saw it, and yeah, all the way back in February, and it didn't even really, just barely stayed down there. You can see we were in a slightly different, very short-term, different volatility regime back in December. So the last time we really stayed for a sustained amount of time below the 15 was all the way back to last May and most of 2024, the beginning half of 2024, I should say. Okay, so not really expecting that to happen. So even over here where we had, over here 2024, let's just take a look at that. May, or beginning of 2024, end of May, end of 2023. Let's just look at the SPY over there. Over here. So what was characteristic of that? They were smaller moves. It was moving upwards for sure, very sustained upward movement, but we still got some pullbacks, especially right there at the beginning of 2024. And see how we did pull back to the EMA 20 a few times, okay? And we haven't done that yet. So actually, looks like pretty similar to what we just went through. Okay, pullback or correction below the MA 200, a V-shape recovery, and then new all-time highs right here. We consolidated and went sideways for a little while, and then we started to resume that uptrend. But you can see that within a couple of weeks of that, we got that pullback to the EMA 20. And then we pulled back, pulled back, pulled back, pulled back, and then this was another, this is probably a correction right here. Nope, that was just a pullback, okay? So it was a slightly larger pullback. So we're looking for, at the very least, one of these pullbacks to the EMA 20. So not necessarily, it does feel like we need a larger one like this over here, 5 to 10%, but not necessarily. It could be just the EMA 20. So if we look at that right here, you can see that that's pretty similar to what we went through right now, except not nearly as deep, not nearly as extreme, not nearly as fast of a breakdown, and not nearly as fast as a recovery. But right there, okay, this point in time, V-shaped recovery, then all-time high, consolidating near there. We actually did our little bit of consolidation a little bit below the all-time high this time, and then upward movement. So if we look at that again, over here, a consolidation after the V-shaped recovery, move up, pull back to the EMA 20. So move up, and so what we're saying is we should probably at least pull back to that EMA 20. So maybe we are starting another major bull run. That'd be a very, very, very strong economy. But if we have the catalyst for it, then we have the catalyst for it. It could just be like tariffs. Everyone's very gung-ho about the tariff situation, and that keeps the catalyst moving. But I do think EMA 20 at the very least, and that EMA 20 would represent right now probably close to 3%, 2%. It'd be a 2% move downwards. Another thing I want to see is, what did VIX look like during this particular pullback? We started out looking at that, and I didn't really finish that up. So that was October 2023 to that first pullback to the EMA 20 was January 2024. October 2023. Okay, so that's a little bit, the V-shaped recovery caused this to drive way down to 11. And then January 2024, all it did was bounce back up to 15. Okay, so we're in a slightly different situation, because that V-shaped recovery sent this volatility very, very, very low. And then all we did was hug the top of that particular volatility regime. So here, the V-shaped recovery has driven us down to 15. Okay, maybe even we could go all the way down to here. There's nothing to say, right? Based on what we're looking at right now, it is possible. I don't think it's too likely, but I could very easily be wrong, and it could just come over here, and then we could get our pullback after we snap back from this initial pull down all the way down to an extreme like that. That would be super, super, super strong market for us to do that. I don't think so, based on what I'm seeing in VIX right now, based on what I showed you guys with my Maverick indicator. Okay, so I wonder if I can, that's probably the easiest way to do that. is if you see that curl upwards in these bars right here, and that's what we call the uncoiling of our coils, or the, decompression of our coils. We started out with coil 1 very close to 0 and coil 2 right about 2. You can see that they are creeping upwards. And that just tells me that the volatility inside of these, inside of the VIX and inside the options are being increased. So the market maker is anticipating a move. You can see that the last 3 days especially, they've really started to subtly move them like this. It started to subtly move right here. And the last time that happened, we spiked up to 30, about 30. Okay, so that would be a pullback. What was this date? March, beginning of March. Okay, so that was beginning of March. That was when we went below the MA 200 right here. Okay. All right, so I still think probably a pullback to the EMA 20. It could be a chop sideways to the EMA 20 if the market is super strong. I got a bone to pick with you yesterday. I asked about getting into a SPY trade at a cheaper price, and I said no. It could have scored a big payout. True bummer. What can I say, Barry? I don't know. If you got in at the exact same trade that I was talking about, yeah, you probably would have been a winner. I don't know about a big winner. You probably would have made, I think, about maybe 10%. Maybe about 8% or 10%. And that is risk though. Or the risk versus reward is not necessarily there. So you might have won this particular trade, but if you continuously make a habit of it, what will happen is you will make your 10% or 8% and 10%, 8%, and then you'll make a 25% loser. Then you'll make a 25% loser. And on net, you might still be profitable, but it would just be baby profits. Versus if you'll stick to the system and then repeatedly do the system, you'll end up a net very large winner with a lot of profits. Okay, so whenever anyone asks me about trades, I'm not thinking about a single trade. I'm always thinking about if you were to go and do this over and over again and repeatedly do it, because I can't answer about a single trade. There's no one knows. No one has a crystal ball. No one knows exactly what's going to happen in the future. So if I said, yeah, do it, and you make 8%, great. You're super happy. If I said, yeah, do it, and you lost 25%, then you'd probably be pretty upset. And then I would be going, okay, well, the next trade, I can never tell you what the next trade is going to do. All I can tell you is the edge that we have. And if we do the same trade 10 times, 100 times, 1,000 times, then the mathematics or the statistics are expected to work out and you'll be net profitable. Right? So if you just do one trade, I have no idea. That's why we always tell you guys, don't put all of your money into a single trade. Even if you have a 99% win rate, you don't put all of your money, all of your savings, you only put in money that you can afford to lose, because you might lose that next trade. So, sorry that you would have made some money in the SPX trade today, but I'm always thinking about repeatedly. If you do it over and over and over again, will you make money? And if you do that over and over again, if you keep making these 0 DTE bets on levels that were designed to behave a certain way from the night before, then you won't end up a statistical winner, or you'll end up a very baby statistical winner. It won't be worth your invested capital. Your invested capital will be better utilized somewhere else where it can capture larger gains on a more consistent basis. Okay. Okay, so let's take a quick look at we just looked at our volatility regime. We'll take a look at our breadth. So let's do it with first the new sector. I'm still working on this, not quite done yet, but I think I'm pretty close to finishing this. We've got, just give me, I know Barry, but I wanted to explain that. It's a good point and a good lesson. All right. So as a trader, as an investment manager, as a portfolio manager of your own portfolios, you always want to look ahead. You don't want to just look at a single trade. You want to take the basket of trades that you make over a quarter or over a year. I mean, how does Wall Street measure themselves? They do it mostly by the year, but they also they keep track of quarterly results as well, right? And it's not just every single trade. There's a reason why the investment manager is distanced from the person who's investing the money. But generally, there's layers before you can even reach or talk to a portfolio manager. No, it doesn't matter if you're a $1 billion client. You don't have direct access to a portfolio manager. There's always layers of people who do the customer service side of it before something gets escalated all the way to portfolio managers, because we know that that you can't take that portfolio manager's focus away from looking at the bigger picture, the longer term, and focus on, oh my God, I lost 10% today or whatever it was. So today it looked like it's interesting, infrastructure, building products, infrastructure, timber, basic materials. Those all fit a theme. That's really interesting. And then we've got over the last day, lithium, timber, building products, home builders. So home builders, building, construction, infrastructure. But then over the last month or so, we don't see that. So what will be really interesting to me is after another few weeks, will some of these sectors show up in the 1 month? And if they do, then that's a signal that something in the economy is turning, and investment managers are starting to put their money somewhere else. They're starting to see that there is some sort of building, some sort of construction, some sort of building up of the economy. And now that I'm talking about it and I'm thinking about it, it kind of makes sense, because we started to get some news about these tariff deals getting done. So if that's the case and more of these deals get done, what it does is it incentivizes a lot of companies to build their manufacturing in the United States in order to avoid a lot of these tariffs. We already had announcements that, NVIDIA, Taiwan Semiconductor, early on, a couple of months ago, that they started to invest in the US, they committed to start building their manufacturing capabilities in the US. So now that we're actually getting some of these tariff deals done, it kind of does make sense that investment managers are going, okay, well, more and more of these companies are actually going to try to build some sort of manufacturing or fulfillment within the United States. So therefore, they're going to need a lot of building products, a lot of infrastructure, a lot of timber, a lot of concrete, a lot of things like that. So this is still early on, but these are just early signals that might be happening. I need a few more weeks for it to show up in the 1 month, and obviously another month for it to show up in 2 months, and then so on and so forth in order to get it into 6 months. But obviously, it won't be too late by then, but it'll also obviously be a lot later than right now. So this is really interesting to note. So let me take a look at a few of these. PKB, timber, pave, wood, pave. Let's do one at a time. PKB. Interesting. So that's definitely a breakout. Starting to run a little bit. Wood, not quite there yet, but it's close. If it can break above the MA200, there's many times or many examples that we had over the last week where we saw a breakout above a 200, pull back, and then bounce from there. This could be one of them. This is way too early to say, but we are MA50, positive slope. Okay, EMA8, I would call this, I wouldn't follow it so closely like this. Why did that not work? Let's try that again. Wrong tool. Okay. So I wouldn't follow it so closely like this. Okay, that's way too short term. I try to take a further back view and say that, well, that EMA8 did this. Okay, and it just turned upwards to match that MA50. Did it with this gap up right here. Dangerous place to bet because you have resistance right there. We went through that resistance today, but then we have resistance at the MA200. So I really do, in this case, want to watch it break above the MA200, pull back, and then bounce. Maybe that takes a few weeks, and maybe that gives me the confirmation over here as well, where we see wood showing up in the 1 month over here. Okay, so let's take a look at PAVE. Lumber company where I live has been very busy. Oh, really? That's good to know. Anecdotal evidence to support is always good to have as well. PAVE is going nuts. It was already in a very, very strong trend. I mean, if I look at this versus XLK, not that different, which is a little surprising. I mean, they're very different sectors, but they're behaving very similarly. Let's say PAVE. Yeah, look at that. They're right on top of each other. Right on top of each other. I mean, PAVE lagged a little bit the last few weeks, but it's catching up. It's almost there. That is pretty incredible. Let's take a look at that versus MAGS. Okay, MAGS obviously with its market cap is outperformed, but the shape is surprisingly similar. That's really interesting. Let's see, what else would I want to, if I compare it to SMH? Okay, outperforming semiconductors. Again, a fairly similar shape, but it is barely outperforming semiconductors. That is really interesting to know. And so that is definitely going to go on my list to pay attention to, is PAVE. Okay, and we'll develop that list in just a moment. Let's take a look at the other sectors. I don't know, wood, PAVE, PKB, XLB, basic materials. That probably has a lot to do with that MP and insurance. That's just today. Home builders, we saw a lot of activity over the last week. So PAVE. PAVE is the one that really is catching my attention at the moment. So let's see what makes up PAVE. Oops. Fastenal, Train, Quanta. Let me make a list. Or actually, I'll add it to my list. How am I going to do this? Let's do. Okay, Fastenal, Train, Quanta, EMR, NSC, DE, PH, CSX, ETN, URI. I'm going to go until I stop really recognizing a lot of the names. So CRH, SRE, ROK, UNP, Vulcan, MLM, NUE. That's probably, well, okay, I do recognize a few more. EME, Hub, TRMB, STLD, that's probably about it. J, Builder, BLDR. That's a lot to add to my list, but MSMTZ, okay. So that'll be it though. And let's take a look at some of these. Did they add them in order? Hopefully. Yeah, I think so. Okay, so this definitely needs a pullback, Fastenal. Parabolic move. Great move right there. So again, let's take a look. MA50. Okay, EMA8. Right there. Okay, so this point right here, this large green bar right here, would have been a very nice entry, and you would have captured this entire trend so far. So that's that really. So how would you do something like this? So what I'm using the EMA8 versus the MA50. That's a pretty long-term trend. That can go for a month or so. And but me personally, I don't like to hold things for longer than 4 weeks or a month. I do hold some things, but I get itchy. I get holding it for a really long time. I just, I want to trade out of it. I want to take my money and put it somewhere else. I see all these other opportunities. That's just me. That's my personality. I don't like to sit. And most things don't trend like this, right? There's little pullbacks along the way. And so this would have been a great investment because it basically went straight up the whole time. We had a little bit of pullback action when we first got in, when you would have first got in, but ever since it basically going straight up. So what something like this, well, let me see if I can find one that is actually happening right now, because going backwards with the options in time is always a tricky thing. So let me see if I can find a opportunity that is ripe. Train is a lot closer to that, but still a little late. It would still be a pullback, but this is looking like a better entry than Fastenal, because not right now, but on a pullback. Because if the whole market pulls back and this pulls back, and we get to that EMA8 or that EMA20, it's going to be a great time to go in. And it's early in this move after this long consolidation. The longer the consolidation, the longer you can expect the move afterwards, whether it's down or up. So I really like that this is early on, whereas Fastenal, it had its consolidation way back here and already moved a whole ton since then. So Train is definitely catching my attention on a pullback. I'll make a note to myself on that. I could make a new watch list, but for now, I'll just make a note to myself. Let's look at PWR, Quanta Services, same thing as Train, moved a little too much. Although this trend is strong, it didn't pull back and consolidate. Yeah, it didn't really have a consolidation. So this is really strong. Starting to go parabolic. Okay, and once it does that, I'm a lot less interested in it. So I'm a lot less interested in Fastenal. You know what, let me just, Fastenal, not really. It's just a really sharp sloped linear movement. I'll keep that on. I'm gonna delete Quanta off my list. EMR, great trend right there. Very, 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 very steady. The entry point right there would have been right there, one of these 2 days. Okay, why? Same thing. EMA8, sideways, up. Okay, I guess I drew that a little too late, so maybe I'll just put my entry point 1 day later, okay? And then that EMA or MA50, okay, has been up since there. So matches, goes away from the main trend, went sideways instead of up, and then it reverted to up. And so that's a great entry. So if you can imagine, if you bought an option right here and you were able to hold it this entire time, June to end of July, that's 2 months. Like I said, I generally don't like to hold for 2 months, for more than 1 month. But let's just say you held all the way to here, exactly 1 month, Thursday the 5th to July the 5th. I guess that was a weekend, or July 4th weekend. So July the 3rd, this starts to get a little away from the EMA8, and you just, you're out already right there. And then you see this right here, you switch from this longer term trend to now the EMA 8 bounce because you're well into the trend now. And then you re-enter right here on a bounce where that low touches the EMA 8. Then you've got 2 days of chop, and then bam, you're off to the races again. Okay, so that could have been a really great trade right here, and then the beginning of another really great trade right here, potentially. Okay, so again, hopefully I'll find an opportunity that is ripe right now, and I'll show you what I mean by what type of option I would pick for this type of opportunity. Okay, okay, that's the NSC. Nice little pullback to the EMA 8 bounce right there. Okay, so this is really good. It's gap up, sideways, move into the EMA 8, and then potential bounce and move from there. Very, very nice right here. Okay. DE. Okay, DE is potentially early signs. We have the EMA, or sorry, the MA 200. Sorry, not MA 50. I'm saying all the wrong things. MA 50. Let me change that color. That's probably why I confused myself. I usually use red for the MA 50, so I'm going to use the green. Okay, so MA 50, and then you see this chop sideways. Maybe you could call that maybe turned down a little bit the last week, but this is mostly a chop sideways. Then the MA 50 is moving up like that. Then you see the EMA 8 chopping sideways, then moving down, then bouncing up. Okay, so now it agrees with the longer term trend. The subtle difference here, though, is that it did it below that MA 50. So MA 50 as resistance, but we broke through that resistance sort of today. The low did cross back below it. What I really want for confirmation is a bar, just like any of these bars, except the low does not touch that MA 50. Then I'm comfortably above that MA 50, and we're good to go for a potential longer or like medium term move, or a 1 month move to 2 month move upwards. Deer is looking pretty good. It's fairly, next few days, it's a possibility. Okay? Then we got pull to home. Okay, so right over here, this bar would have been great. This bar right here, a couple days ago, another great entry right there. Okay, so it looks like we might have missed these just by a couple days. CS6, very nice trend. I can see why PAVE is doing well, because all of these, or not all of them, but most of these are looking really, really good. CTN bounce and took off. URI is too much too fast. I'm going to delete that off my list for now. CRH, same thing. SRE, break above the MA 50. This is what we were talking about a little bit earlier with, what were we looking at earlier? Was it PAVE? Wood, yeah. I wanted to break above the MA 200 and pull back. And so it's looking, SRE is looking like that. So it broke above the MA 200. Did I say 50 again? I'm getting all my moving averages mixed up. MA 200 broke above the MA 200. Okay, and this is either, it didn't go screaming higher. So this is what I'm looking for in deer over the MA 50. That low did not touch the moving average. Okay. So here, and then if it kind of pulls back or it goes up a little, then pulls back and then bounces, then we're good to go. ROK, nice strong trend. UNP, not even worth looking at. VMC, couple days ago. So this MA 50 went flat. So this is not quite ideal, but this MA 50 is still overall an upward slope. Okay. It did go flat right here, so it's not the perfect case, but you're starting to see that separation between the MA 50, the EMA 20, the EMA 8. You're starting to get that separation right there. And then you did see that EMA 8 go down and then revert back upwards. So this is like a fringe case. It's not like your classic, like perfect case scenario, but VMC is starting to look good. The only problem here is we've got earnings and we do have resistance not too far above. So this would be wait for a pullback. MLM, similar, okay, except this did stay positively sloped the entire time. So the perfect entry point would have been this large green bar right here. You would have had an entire week of amazing, great returns right here. This is 565. So even if you entered at the very top of that bar, which I wouldn't want to, I would want to try to catch it closer to that EMA 8 if we had been watching it. Yeah, this already went almost 4% in the last week. And on the options, that could easily be anywhere from 40% to 120%, depending on the exact options that you picked. EME, huge gap up. Interesting. That's an extreme move for just an upgrade by UBS. That's giving UBS a lot of credit right there. Right before earnings, I'd be very cautious of EME. I'm actually going to delete that. I don't want to get confused by it. Hub, you got the earnings coming up, still looking very good. TRMB, very nice. So you can see that the last couple, Hub and TRMB, especially TRMB, look at that really beautiful sideways consolidation. And then it starts to move up and it just doesn't look back, okay? So we've got that positive slope right here, even more positive right here. And then you've got this EMA 8 doing this, okay? So again, this is not a perfect case because what happened is the EMA 8 kind of maintained its positive slope. But if we were looking at price, you could see that it was more flat and then moved upwards. But anyways, this is really, really beautiful example, right? And Hub is similar, right there, not as clean, but it did break out of that MA 200. And so this does give me an example of breakout above the MA 200, okay, consolidate for a few days and retouch that EMA 8, or sorry, MA 200, and then we're off and running. Okay, so that's what we want to look for in wood as well, an entire sector, timber sector. J, very similar to the last two. Builder, not yet. Let's delete that. MTZ, yeah, very good. So there's so many beautiful charts in this sector. I can't believe I missed these. But now maybe we won't miss them because we have this little sector scanner. So I didn't find a great example of today. Let me see if I can see if I'll run a scan over here. See if I can find a good example. And I can show you picking an option. Let's look at this one. Oops. There we go. That is looking really good. If that's a candidate. This is a candidate. No, okay, so SPGI just have some resistance right here. Why can I? Horizontal line. There we go. Yeah, some resistance. Actually, we're right at resistance. And then we've got a little bit more right there. Okay, so not ideal. EW. EW is, look at that, huge gap down. Well, that's an amazing, incredible gap downwards. That's 85 all the way down to 65. Just like lost a quarter of its value, looks like on these earnings, or just before earnings, maybe on earnings. Yeah, they just, and in positive earnings too. I guess the revenue surprise was not even, I mean, 1.27. They got punished. They got punished for this. Anyways, they've been going up ever since. They're obviously filling a gap. Everything's a gap fill at this point. And then, oh, that's unfortunate. Was it EW? No, it wasn't EW. All right, yeah, because this gap up on this earnings, yeah, this is not playable for a little while. Let's do, that's the first one, CELH. Okay, this looks familiar. Did someone ask me about this? U-shaped recovery? I think someone might have asked me about this. And we've got earnings coming up. So not a perfect example. So everything I'm about to tell you, I'm going to pretend earnings it wasn't coming up on August 12th. Well, that's 2-3 weeks away. Yeah, we could still do this and just kind of end it right before earnings. So this is something that you would want to end before earnings. So that's Monday the 11th. So if I wanted to hang on to this, and I'm saying, I think this is the beginning of a nice leg up like this right here. Okay, so where this was was that right? 25% move. I'm shocked. I did not expect that to be a 25% move, but that's a 25% move. So if I think that this is another potentially 25% move, okay, then why wouldn't I just hang on to it to here? And even if I don't think it's a 25% move, what if I think it's just a half of that, a 12% move? Okay, so if I say, let's be a little bit more conservative and say, maybe this time it only goes up like 12%. Okay, so that would put us right there, just call it about 48 and a half. Okay, so in this case, that's not even that far away. 46, we're currently at 46. This was way down at 44. A 10% move would be up to 48 from here. Interesting. So I'm going to move this up. There's no reason. So I'd say like a 15% move from this bottom. Okay, we'll just say to 50. Okay. And just say that's without doing a whole bunch of analysis, just kind of eyeballing this thing. I think it can get to 50. Do I think that it can get there in just 3 weeks' time? Maybe not. Okay, so if I just go by how long that took and just add that right there, maybe I think that maybe we'll get to a reasonable expectations that it could get to 48 and a half. Did we just end up at the exact same place? I think we might have ended up just back at the exact same price that we had earlier. Okay, so I guess that's a pretty good estimate then. So my expectation is that this thing can get to 48 and a half, but it might take 3 weeks to get there. So how do I play that? If I choose too short of an expiration at the money or in the money, then time decay is going to absolutely destroy me. So if I'm playing something out for 3 or 4 weeks, then a lot of times I still don't like to take really long expirations. So what I will do is expect to hold all the way till expiration. And if I do that, I cannot take in at the money. and I cannot take an out of the money. Because if I'm wrong, and even if it just chops sideways, my option is going to go down to 0. So I have to have something that has intrinsic value in it. That way, if this just chops sideways, I don't lose my entire investment. I only lose the extrinsic value part. And then if it pulls back down, just say all the way back down to these lows right here, then I would just stop out. I would stop out at this EMA 20. Okay, if it crosses below, it closes below that EMA 20, I would be out. Okay, so we're starting to develop that plan. What's my thesis? My thesis is based on this pattern right here. We've got the MA50 going up. We have the EMA 8 reverting back upwards. It looks like it is the next leg of a reasonably long medium-term trend right here. Short to medium-term trend, 1 to 2 months. So this was end of May to beginning of July. So that was a little over a month. Okay, so I think for another month we could go up. The only challenge to that is these earnings right here. So I want to be out by earnings. So that's my thesis. Based on this pattern, Celsius Holdings, which is this healthcare? Let's do a little bit more research. Let's make a proper plan out of this. Healthier nutritional foods supplements. Oh, this is a beverage. It's like Monster Energy. It's like Celsius. My kids are nuts over this. Okay. They're a beverage company. Interesting. Okay. So are beverages doing well? How's Coke doing? Coke is not doing great. Pepsi is maybe starting to get okay if it could get above that MA 200. We've got Monster. Monster beverage is not bad. It broke down here, but it is recovering. Okay. And then how are my, oh my gosh, what just happened? My beverage, food and beverage was a few days ago at least was up here. Oh no, it's way at the bottom. Everything is positive though in the last week. That's amazing. Every single one is positive. Okay, let's see about the past month. Why don't I see it? I missed it somewhere. Unless this doesn't show me all of them. It might be, the screen might be too short to show me everything. I think it's too short. Let's do this. There we go. Yeah, it's near the bottom of the list. Still up. Good amount, 2.31. Market's been strong last week. Okay, is this month? I did last month. Let's take a look at 2 months. Yeah, it's towards the bottom. I guess it shouldn't be surprised by that because it is really part of Staples. And Staples has not been doing well at all, XLP. Okay, however, Celsius is defying that and it is an early mover upwards. Let's just say I'm okay with it anyways. Okay, normally we're just using this as an example. So I'm not going to trade this. I'm not going to put any money in it. If you do, that's completely at your discretion and at your risk. Just knowing that this is not one of the top performing sectors in the S&P right now, and we are anticipating a potential pullback in the S&P. So now is not a great entry for longs anyways, especially in one of the weaker sectors. So let's just play. I need an example to show you guys this longer longer hold period option. So I'm going to use it, okay? But I'm not going to put any money behind this, and I don't suggest that you do either, okay? But just from a technical standpoint, it looks really great. So so what we would say is that my trade idea is weak on this one, okay? So where we have the four parts of trade, okay, with the trade idea, the timing, the execution, and the management, okay? So what I'm saying right now is that the whole thing, the whole foundation right here is it's a weak trade idea, but I'm gonna do it anyways, okay? Just as an example, okay? So this is a weak trade idea. I personally would not put any money into it. But the technical setup is great, but the technical setup can be the entire premise of your trade idea. But if you do that, you're going to be missing a lot of important forces that are pushing your trade around. Okay, so just to be very clear about that. Celsius is down 14 cents after hours. Okay, thanks. All right. Let's see. How would we buy that as a option spread? I'm not sure which one you were talking about, Naples fan. I missed your question when you typed that. So you want to look at deck? I can quick look at deck. Yeah, just after earnings, little pop up. This is not looking that strong either. So let's just go forward with Celsius, just so I have an example. And let's just say the timing is right. Technically, the timing is right. So technicals are great for timing. They are not necessarily great for the trade idea. So the trade idea should have other things in consideration. It should have the overall market in consideration. It should have the sector in consideration. It should be built on some idea other than just technicals. A lot of people do trade just technicals, but again, they'll miss a lot of important details if they do that. But timing wise, technicals are great. They're great for telling you when to enter and when to exit. So now is a great time to enter according to the technicals, according to this reversion to the short-term reversion to a long-term trend. So let's just say we wanted to do this, and now I go to execution, and there's a lot of things that I could do in order to try to execute this, but I, in particular, because I said I wanted to show you guys, is I want to show you holding to expiration, okay? So if I pull up my option chain over here, and go to Celsius. Okay, we say we have earnings in August 11th, so I want to be out by August 8th. Right, is that right? We have earnings on August 12th. Okay, so I want to be out by August 11th, but in terms of if I'm going to hold something all the way to expiration, I want to be August 8th. Okay, so there's a couple ways that I can do this. I know already for sure I'm going to be down in the money. Okay, and the reason why is if you look right here, let me change my columns. Let's go over here. Let me add intrinsic value. And then maybe I'll get rid of GEX for now. Okay, so over at the out the money, I have 0 intrinsic value. Everything's 100% extrinsic. Okay, so this thing is marked at 256, and there's $2.56 of extrinsic value. The further I go in the money, the larger percent it becomes intrinsic value instead of extrinsic value. Here, there's only 73 cents of extrinsic value, but there's $21 of intrinsic value. So what that means is if prices don't change at all, if Celsius stays at 46.64 all the way until August 6th or August 8th, or it doesn't matter. Maybe prices go all over the place and then it just closes exactly where we are at 46.64. This option will lose 73 cents. This option will also lose 73 cents. And the leftover value would be $21 on this one and 16.6 on this one. So you would have lost very, very little percentage-wise. Okay, and that's what I'm looking for. If I'm going to hold all the way to expiration, I want to lose very little due to time decay. All right, so if I do this, I'm going to lose 100% due to time decay. If I do this one, I'm going to lose everything except for 14 cents due to time decay. That's a lot to swallow. Okay, so I want to find something that is more acceptable. Am I okay with a 50% loss? Okay, then I can go with this 44.5. If I'm okay with maybe a 30% loss, then I've got to find something. Okay, right there would be still about 50%. So I've got to go a lot further in. So this would be about 30%. I've got to go to 42.5. So what we're looking for is a value that is acceptable for me to lose. And how do I know if it's acceptable for me to lose? Then I have to know what my profit potential is. So we said that we think that Celsius could get to 48.5 by the time this thing expires. So here we saw at 48.5, this 42.5 strike will be worth $6. So if I pay $5.22 for it, that means I can make 80 cents, but I might lose $1.60, $1.30 just if it does nothing, does zero, then I'll lose $1.36. That's a worse than a 1-to-1 reward risk ratio. That's no good. That's terrible. Okay, so it looks like for Celsius, I would have to go even further in, which is kind of crazy. Okay, so, but again, these don't necessarily, depending on your account size, these don't necessarily get all that unaffordable, right? Over here, you are just paying about 1,000. Okay, so if you're going to hold on to it longer, you are going to tie up more of your capital. The problem is though, then is how much could you gain? Because this already looks like if my value is going to be $6, I only make 80 cents. That's not too exciting. Why am I even bothering with this, right? It's like I could probably make a lot more money going into a different trade. So this may not be a good candidate for holding onto a longer term. It might be a better candidate for something like a debit spread, which I don't think we'll have time to explore, but because we only have a couple minutes left, so let me just finish this out. So where might it begin to make sense? It might, let me just take a stab at it. How about this one? So there's an interesting anomaly here because of the bid-ask spreads, where this extrinsic value is significantly lower than the ones around it. Okay, so is this one, this 33-cent one. Okay, so if I do this one and I'm able to get in at say $8, okay, 39. So this thing will be worth $9.50. So I make $1.50 on my $8. 18%, not terrible, not great, but not terrible. It's kind of doable. Okay? So, and here I will care less about the width of the bid-ask spread if my plan is to hold it to expiration. I don't plan on having to sell it to anyone. Okay, so the bid-ask spread becomes a little bit less important, and what becomes really important is the amount of extrinsic value that I'm paying for, and then the return that I can get on top of that. So I could lose 43 cents, but I could make, what did we say, $1.80? $1.50? 39.950. Yeah, $1.50. Okay. Now that becomes a much better reward risk ratio. That is almost a 4-to-1. It's over a 3-to-1. So then I would be a little bit more interested right here. Then I would start looking at this one also. That was also an anomaly right there, where it's way lower than everything around it. So here, just say I paid $11 for it, then this thing would be worth $12.50, and that's not good. So I can make it $11.50 here. I'm sorry, $1.50 here. I can make $1.50 here. I would just go here because percentage-wise, it's a much, much better deal for me. Okay, so that's how I pick a option that I expected to hold to expiration. Okay. All right, guys. Hopefully that was helpful. Hopefully you guys are still learning a lot. How do I buy this as an option spread? I'll spend a few seconds doing that. So same evaluation. If I'm okay with losing 100%, then you can just buy at the money. Okay. Again, I only want to hold to that expiration right there at the longest. So here I could make about a little over 100%. And so if I'm okay with losing 46 cents, then I would just buy this one. Okay, because you're expecting that trend to happen. And if the trend doesn't happen and you just get chopped or you get pulled downwards, then you would exit your spread and you've lost very, very little money. And you had the potential for 100% gainer, even on the maximum risk. So the actual realized risk, if you ended up being wrong, would be a lot lower than that. So you can actually, your reward risk ratio ends up being like several 100% if you do it that way. Or if you wanted to be a little bit safer, then you could just say, okay, well, looks like at 43, 44 were these lows right here. And if it pulls back to there, I still want to be okay. So then we go to 43 or 44. It's not going to be nearly as lucrative. Just say 44. So if I buy 43, sell 44 for a debit spread, okay, based on this, you can still get very close to 100% gainer. Why would you not do that? Build in a lot more safety. The only caveat here is look how wide these are. Okay, so you probably won't get 55 cents here. You'll probably get more like 65 or 70 cents. And then you have to decide if that's worth it for you in terms of is it lucrative enough versus the risk. So again, risk reward or reward risk. Okay, I could make, just say you got at 70, I can make 30 cents. I might lose 70 cents, but the chances of us moving all the way down below 43 in order for me to lose that 70 cents, okay, I would say, like, given the trend, given my thesis isn't strong though, assuming I had a really strong thesis, it's true, and then I had a great trend and a great technical setup that I know has proven to work X% of time, then I'd be very comfortable and just say, okay, well, if we dip below that EMA 20, I'm going to close it out early. I'm not going to realize that entire 70-cent loss. And then that improves my reward risk ratio a little bit better. Okay. All right, so that's how I do it. My first example was only a 50-cent spread. Correct. Yes, because I did it at the money. I spent it at the money, and one in the money, one out of the money. I spend it at the money price. That should always be right around half the. Oh, thank you. Thank you. You're saying the strike difference was only 50 cents. Yeah, that's terrible. That's terrible because of how wide everything is. But that could just be because we're on the weekend and the market maker widened everything out. You would have to evaluate this on Monday. What if I do the proper one? If I do 46.47, let's see what that, yeah, about 50. So this is appropriate, roughly 50 cents on the 46.47 is what we would expect. Okay. All right, thanks for pointing that out. Thank you. Okay. All right, guys, we're out of time. Thanks for joining me. Hope you guys had a great week. Hope you guys have a great weekend, and I will show you guys on Monday. The sector performance dashboard is something that I programmed, and that it's not 100% yet. Everyone always asks me if I can share, and I always tell them I would love to share. I would love to share, but these guys at TradingView hate me. They think I'm useless. They don't. I don't know. I can't win against them. It's their platform. Okay, so basically, I don't even need to go here. You can see their comments to me. Basically, over here. Yeah. All right. So. Originality and usefulness. They think everything that I program, that I've tried to share in the public, every single one, they've told me I've been unoriginal and unuseful. So unfortunately, I can't share them with you guys. Okay. All right, guys, have a great weekend, and I will see you guys next week.